What's going on, everybody? It's your boy C-Zar, and we are talking about OnyxCoin today, XCN. Let's jump right into it, okay? It is the 3rd of May today. Here we are at about 1.72 cents right now. 10 hours left in the day as it stands. We've seen a low of 1.655 cents. We've bounced a little bit from there. What's nice about this and what's not nice about this is it's right at this same area, rather predictable area to bounce from, right? You're literally bouncing at the exact same area that you did here, not financial advice, not a financial advisor, but I would assume that there's a lot of people who are getting excited about this and probably saying, "Woohoo, we're going to go to the upside." But I've said this plenty of times in my experience, in my time doing YouTube videos, right? In my experience, in my like just over 9 years of doing technical analysis now, triple bottoms are very rare. What do you mean they're very rare? Cesar, look, we got one right now. No, see, this is what I mean by they're very rare. It looks like a triple bottom until it doesn't. You know what I mean? Like they're very rare patterns. They actually don't happen too often. Oftentimes, and I would say like 90% of the time, if you see a triple bottom setup like this, it's just an inevitable breakout to the downside. That's what it is. Even if we go all the way up here, like inevitably, you know what I mean? And maybe not. If OnyxCoin, sometimes they do exist, sometimes they do happen. If we were to move up, I would say above like this high here, getting above this low point here, yeah, then we're probably, that is a triple bottom for once in my life. We've actually seen one happen and we're actually moving up higher. But until we see something like that, until we get a miraculous bounce, and that's kind of the key here actually. On this note of things, by the way, hit that like button and subscribe if you're liking the video so far. On the note of identifying triple bottoms, you can pay attention to the behavior. Pay attention to the reactions that you have, right? Here on this first reaction, the very first time that you bounced off this area, you would have had no idea to bounce here, but you did. Maybe there's other indicators to bounce here. You pumped up 18% in that first 4 hours, right? That first 4-hour candle right there, you pumped 18.8%, almost a 20% pump in a 4-hour period. From here, over the days to come, like 2 days time, you moved up 48%. So both times, immaculate bounces. On the third attempt, and this is not just true for horizontal lines, this is also true for diagonal lines. Pay attention to this like behavior. On the third attempt, if you are to break through, and I think you will likely see a lesser bounce, right? A lot of people might look back and what they do is they're like, oh, back here, we bounced all the way up here. Maybe we'll get half of that, whatever. It's just a little bit higher than this. Oh, maybe we'll stop right here. That's what we did the first time. Hey, that makes sense. Prior resistance, and maybe we do. Maybe we do. It's possible. I'm not saying that it's impossible. I'm just saying what I would expect here, if you're like me and you assume that the price is going to go lower, what I would anticipate is a weaker bounce. In fact, not just a weaker bounce, but the weakest bounce of the bunch, right? This one would be an outlier in the sense that it's going to be the weakest bounce. If it's a weak reaction from the same line that provided positive reactions before, different behavior perhaps will beget different results, right? That's kind of the expectation there. All we're doing is finding a lower high right now. This is nothing to get excited for. That's all I'm trying to say. Look at the volume that came in, right? This candle is about as big as this candle here. The volume that came in for this candle was a lot larger, or just a little bit larger than the candle that we've got now. Overall, pretty insignificant volume if we're being fair, but looking at this, and it's the weekend, so of course it'll be, you got oversold, you're having a positive reaction. If you reject the 40 though, that's not a positive reaction. That just means you're going lower, right? It's like when you get overbought. Let's see here, let me find an example. Yeah, you get overbought and you bounce off the 60. Look at that positive reaction. Look at that right there, right? Bounce off the 60, positive reaction. If you got overbought, bounce off the 60, positive reaction. If you bounce off the oversold zone, reject the 40, you get a negative reaction. Same kind of idea, but same kind of concept, but to the downside, right? So that's all I'm trying to say there. It wouldn't surprise me at all if over the next 2 hours, which that's how much time we have left in this 4-hour candle. It wouldn't surprise me if over the next 2 hours we close somewhere around here. We do set ourselves up for a 40 rejection, and even if we don't, you guys, we can go up to the 50 and reject there too. It's not like this is what has to hold us down. It can be anything. I mean, hell, we can go all the way up to the 60 and still go down, right? We can have a little bounce here. I'm not saying that it has to stop here. We can have a little bounce here. I just doubt, I would be surprised, in fact, if we saw prices above 2 cents from here. And if we do get above 2 cents, remember, that's that key area. That's that final domino to fall. Once we get above 2 cents, 2.02 cents on a daily closing basis, not on a 4-hour wicking basis, not just moving up here and then moving down, but like a daily closing basis, 2.02 cents. Very, very close to 2 cents, just above it there. We close a daily basis above there. I don't care where we are, we're moving up at that point, right? That's the level to watch. 2.02 right here. maybe even 2.035 if you want to be like super conservative on it, but I think this price is fine. And yes, we have resistance here, we have support here. Relatively speaking, it is a significant area, but also if we're looking at this on a daily basis here, I delete some of these white lines. From a high or a low to a high here, come on now. The 236 is right there at 2.02 essentially. So closing right above that is what would confirm and validate the notion that we are taking out this high. We're on our way higher. At the moment, the target area of 5.5 cents to 5.6 cents as far as a bull flag breakout goes, it's still valid. It is still valid up until we take out these lows. But I think inevitably we will take out these lows. Don't be swayed by the way the day looks right now. I certainly am not. It can change. You know, it can definitely change. But what we would have to do to change that, I just told you, is get above 2 cents, right? I'm fine with that. Personally, not financial advice, not a financial advisor. I would rather buy up here. I'd rather buy up here than buy down here, because right down here, the statistical probability is you go lower. Up here, the statistical probability is that you go higher, right? So I'd rather buy in a position of strength. And of course, if you buy here, it's more ideal than buying up there, but that's just the way that I operate. Daily RSI here looking sad, right? Oftentimes, whenever you reject the overbought zone, you either find support at the 60 if you're lucky, most commonly the 50. We didn't do that, so next is the 40. And if we're very unlucky, maybe the oversold zone. But those are all the areas really to bounce from. We could bounce anywhere in between. It's not like a requirement to go to any of those areas, but certainly you do seem to show respect at the 40 level there, even as support right here, right? And support back here. It seems as though you've respected it a couple of times, so I would expect that you do show respect on that. Going lower here. I'm not anticipating that you get oversold, but I am anticipating a little bit of a drop over the coming days. Something that will take you ultimately down to about 1.43 cents. This is the expectation, right? Something like this right around here, 1.43. That's right there at the 0.5 on the fibs. You can see right there, clear as day, right there, 1.43 cents. If we're looking at this on a weekly time frame now, we zoom out and we look at this overall move that we had here from the relative low to the relative high back in January there. You also bounced off of your 0.5, precisely off your 0.5 on April 7th. So now we're just calling for the same thing. Bounce off your 0.5 here, right? Move up higher. And a lot of cryptos, for some reason, have been liking their 0.5s lately. It's an area that they find resistance or support on. If we go back here and we put a line right at this weekly closing high, you can see that's right there with that 0.5. So significant area in the price, significant area in the RSI as well. And then I wonder too, what about this? Or not RSI, I'm sorry, Fibonacci retracement tool. I just woke up, you guys. And then right here too, it's just below the 382. It's common enough to disrespect the 382. Maybe what this says is we will wick below the 382 but close above it. You know, maybe we'll wick down to touch this as the low, as is common. You like to wick at the lows, wick at the highs, whatever. You don't really close at those. And then you close above like 1.5 cents. Something like that might happen, yeah. So I don't really know if I have anything else to say. We've gone over everything. Hit that like button, you guys. Subscribe if you like the content so far. Inevitably, we could talk about some longer term stuff here real quick. We don't really talk about it too much because we're so focused on the short-term stuff, but long-term, I don't know. I've gone back and forth on this, right? And I want you to answer the question for yourself here, because I personally don't know which one I like more. From a high to a low, and I actually do know which one I like more. I don't like this fib, right? From a high to a low, it's your all-time high to your all-time low. I don't like this fib, right? It's not widely respected anywhere. What, you found support at the 0.69? That's a very insignificant level. I call that a fluke right there, but maybe there's a reason for it. But you didn't find support or resistance anywhere that makes sense on a fib level. This is completely disrespected, and therefore it might be completely disrespected going forward. But if we're looking at XCN on Coinbase, and we take this high, and Coinbase has a lot more volume, you're finding significant respect at the 382, same respect at the 0.69 there, closing right at the 786, bouncing right off the 0.5. You're finding turbulence in the golden ratio. I mean, this seems more appropriate. And the purpose of this, the whole purpose here, let's see here. Let's go to crypto. Let's get this on there again. We'll put it on a weekly time frame. So this is the all-time history. All-time history versus Coinbase history, okay? And the Coinbase history seems to be more respectable on the high to low fib retracement that we're taking here. The reason why we're doing this is because the extensions that play out from the all-time high to all-time low, the true all-time high to the true all-time low, is about 83 cents to $5.63. And personally, I don't think we're getting here. Maybe next cycle, but I don't think we're getting here this cycle, right? Something between, here and there, that makes a lot of sense. With the 1414, oftentimes you do go just above it. So something around $2, not even above $2, is possible. But I don't know. Again, we haven't respected it so far. Are we going to respect any of these prices? Probably not. We'll stop somewhere just above or just below or just above. You know what I mean? Like, it's not going to be pinpoint accurate. And to be fair, with the 1414, it is common to stop just above it, in all fairness. But the XCN USD pair on Coinbase paints a different story, right? We have resistance where, not financial advice, not a financial advisor. I mean, we could hit this by the end of June, you guys. We could hit 41. I'm not saying that's going to happen. I'm just saying it could happen. It really could. We could run the math on that. I don't want to. I want to end this video soon, but we could run the math on that and make sense out of that easily. It's really not hard to do. But that would be, if I'm being fair, that would be at the maximum potential that I could see us achieving by the end of June. But it gives us a whole different target board, is all I'm trying to say, right? I would expect, and this could be a good maximum by the end of the cycle. I like that 235. It kind of lines up with this area, right? Because you would go just above it instead of finding support or resistance right at it. Because that's what you do with the 1414. You rarely stop right here, right? Oftentimes you do go actually above. And I say rarely. It's like 30% of the time that you stop there. I used to say 40%, but lately it's more like 30%. It changes, right? Things go through their personality swings. But something between 84 cents and probably not 84 cents, right? Probably like $1, because you would go above that. So something above $1 or above $2, something in that zone is where I would think we go by the end of the cycle. But by the end of this run, I'm looking for anything and everything in between like 20 cents and 40 cents apparently, man. I'm very strongly adamant about this 21 cent to 28 cent price area here, something around like 26 to 30 cents specifically. That's what I'm personally advocating for, but we could go higher. We absolutely could go higher. But it's just a matter of time. In the meantime, we're going to go lower. We're going to see a little bit of lower price expectations. OnyxCoin loves to bleed to the downside slowly, and then whenever it moves up, it makes up for all that lost time. Right here, it took 2 months of this that was eaten up in like 3 days of this. You know what I mean? So it doesn't take a lot of time to move up. Take your time, OnyxCoin. We're here for you. And when you go lower, I'm going to buy more. Not financial advice, not a financial advisor, but I'm definitely buying more. I'm going to set up some buy orders at 1.5 cents, probably like right there at 1.5 cents, just below, just above. I don't know. Or maybe, I don't know. Has Economic Ninja, have you given us the buy wall yet? Let's see. Why am I writing Eric? Economic Ninja. I'm going to look up buy wall. Can I look that up? Will that not? Oh. How come on my phone, whenever I look up, it'll look up? Oh, maybe this is what I have to do. Okay, there we go. Yeah. Buy wall. Let's see. Okay, so he hasn't made an update on it yet, but we're gonna start doing that soon. Okay. In my opinion, Ninja, if you're watching this, I think a good buy wall area would be right. Nope, not there. Sorry, would be right around 1.43 cents. That'd be a good buy, or maybe even just above there. Right? Not financial advice, not a financial advisor. The reason why I think it's a good idea to buy above there is because if this is the next area to buy. If you're looking to buy, who else will be looking to buy here, right? It is after all a relatively like significant area. If we take away the fib here, you can look here. Prior resistance, prior support, prior resistance there. We go all the way back in time. All the way back. Oh wait, it doesn't look like it's significant here, but if we go on a weekly time frame, it is significant. It's a weekly closing high, right there. So significance throughout the whole damn board. It would make sense that we find support there. I'm sure that beyond just fibs, there's plenty of other reasons to find support there as well. I wonder, what about the extensions? We haven't even looked at the extensions. It's kind of weird to find support right there, but it could happen. It can happen. My thoughts would be to buy above, because we're probably not the only people with eyes on this, right? Whoever you are watching this video, we're probably not the only people with eyes on this right now. A lot of people might have their eyes on this, and if OnyxCoin does drop down here, what if it goes all the way down there? That's great, but what if it doesn't, right? I like to buy just above there, so just throwing my my ticket in the hat there for the buy wall. I think that it should be above. Maybe at like 1.5 cents exactly, man. 1.5 cents, 1.48 cents, something above 1.43 cents though, because you want to make sure that you get all of your whole order. You want it to be filled, right? You don't want part of it ordered. Imagine you have like $1 million to buy down here, and only part of it, you get like $1,000 that's filled down there, because it goes down there, it hits the price, but it doesn't. There's not enough volume selling down there for that to happen. But anyways, I'm just making a moot point at this point, or not a moot point, but I'm beating a dead horse at this point. I think everybody understands what I'm saying. So I got nothing else for you guys. Hit the like button, subscribe if you want to see more content like this. None of this is financial advice. I'm not a financial advisor. I'm just spitballing ideas here. I think that's very obvious, though. Okay, take care. Bye bye.